This is the wrap-up for the live market open for February 10th. It's a Wednesday. Today's big event is Janet Yellen talking. Janet Yellen talks on the background of a dark market mood. It wasn't that terrible with American stocks eventually stabilizing, but things don't look good. Safe haven currencies are in demand. Euro and the yen are higher. Oil prices joined the party and collapsed under 30. They haven't reached the lows of the year, of the decade of 2750, but they are certainly suffering. What we had yesterday was actually better than expected figures in the UK. JOLTS, which is good for the Fed, which provides some encouragement. Also in Australia, it was okay. Let's talk about the big event for today. Janet Yellen testifies 3 GMT. First of all, the prepared statement is released. That means we'll have all the data. We don't really have to listen to her speaking. And the questions and answers in an election year are not that important. So her statement should be relatively balanced, talking about, on one hand, the US economy is slowing down. On the other hand, it's still growing. On one hand, jobs are rising, but at a slower pace. On the other hand, inflation, depending on which measure, it's improving, but not as fast as they want. Inflation expectations are stable. The big question is, what will she say about rate hikes? Her goal is not to say anything clear. I think she will eventually leave the door open for more rate hikes this year, but not in March. That means that if she's very hawkish, talking about leaving the door open even for a rate hike in March, that could be positive for the dollar against commodity currencies and the pound, but negative against safe haven currencies such as the euro and the yen, because markets do not want hawkish statements. They want all central banks to go dovish, and that would help the safe haven currencies. If she joins the dovish chorus, like we heard from Carney of the Bank of England, the Bank of Japan, the European Central Bank, and everybody else, basically, then I think we could have weaker euro, weaker yen, stronger commodity currencies. Also, watch out for oil inventories. They're expected to rise once again, but it's not only crude to watch, but also distillates. Let's look at a few charts. Euro dollar made another big break yesterday, going all the way to 113.40, which remains resistance. I look at 112.15 as support. Further resistance to the top side, 114.60, to the downside, 110.70. Dollar yen, slight recovery, but all in all, the yen is the king, despite talk from that the Bank of Japan is looking at prices. 114.20 to 115 is the current range. 116 is resistance. 112.50 maybe support. But we're back to levels seen a year and a half ago. Pound dollar, the big event for the morning, for the pound, of course, is release of manufacturing and industrial output. 146.50 is resistance, high resistance, maybe 145.50 in the middle. 144.50 is support, followed by 143.65, which worked very nicely. Dollar CAD did show some resilience despite the falling oil prices. Now oil prices are slightly recovering, and so is the loonie. 137.87 is support. 139.10, weak resistance. 140, 140.50. Resistance, Aussie dollar back above 70.40. 71.50 remains resistance. 70, despite the breach, is still support. Kiwi dollar 65.80 to 67 are the lines to watch. Okay, I see